Welcome to the session number 2 of ACCA paper F3 Financial Accounting, which is double entry bookkeeping. Accounting is based on the duality concept, which states that for every debit there is an opposite credit, and for every credit there is an opposite debit. So the accounting statements which we will make in the future, the statement of financial position and the income statement or statement of profit or loss, they require this double entry bookkeeping. Otherwise, the balance sheet or the statement of financial position will not balance. There will be a difference. Okay? So you can say for every transaction there are two effects. For every transaction there are two effects. How? So many examples are coming ahead. Let me give you an example. If you are purchasing something on cash, so one thing is purchases, it is your expense, and the other thing is your cash is going out, your asset is reducing. So see, two things are there. So this will be cleared in the following 26 examples, I think so we have. How to make a double entry? You have 4 steps to remember. Number 1, you need to see what is the account title involved. This is the word, you can say, with which you will make the entry. This is the word which you will make the entry. Fine, you can write it if you wish to write. The word with which the entry is made. The word with which the entry is made. The word with which the entry is made. Okay. The second step is you need to see what is the nature of the account. When I am saying nature of the account, I am referring to those 5 pillars of accounting. Remember 5 pillars of accounting? Assets, liabilities, capital, income or expense. This is the second step, that you need to extract what is the nature. Like I told you, purchase, expense, cash, asset. So you can write here in the bracket pillars of accounting. When I am saying write it, so you have to write it. You have no way out. The second step refers to pillars of accounting. And pillars of accounting means assets, liabilities, capital, income or expense. The third thing you need to see is they are increasing or decreasing. Like I purchase something for cash, so cash is decreasing. So you will write there decrease. Similarly, when I am selling something for cash, cash is increasing, so you will write increase. And finally, you will conclude that this is debit or credit. This is the last step. Debit or credit. The entries are made from this is very important point to note here, because who is doing accounting? That's why we will make the entries from the business point of view, not from the owner point of view. I will not see my pocket. I will see the business pocket. It means the accountant who is making these entries will see the business pocket, not the owner's pocket. Getting my point? For example, if you are investing in the business, so the money is going out of your pocket. So for you, cash is decreasing, but you will not write cash decrease, because you are not talking about yourself, you are talking about the business. So from business point of view, cash is, getting my point? So this is I am trying to tell you. There should be at least one debit and one credit, always. At least one debit or one credit. If there is no on the other side there is no debit, so it means you have done something wrong. And this is one of our chapters, it will come later on, class number 9 and 10, what to do if you don't know what to debit or what to credit. Okay. Mechanism involved, these are the general rules of accounting. Assets and expenses, they both go in the same way. Assets and expenses, they both go in the same way. So whenever assets or expenses are increasing, they are called debit, and when they are decreasing they are called credit. So if I am purchasing a building, so it is debit because asset is increasing. If I am paying electricity bill, expense increased, debit. Similarly, liabilities, capital and income on the other side, these three go in the other manner, reverse. So whenever they increase they are credit. If I am taking a bank loan, so liability is increasing, credit. I am purchasing on credit, supplier, trade payable, creditors, they are called increased credit. So move on to example number 1. This is example number 1, the basic example. The story of the business is starting. What is the story? I am a sole trader, or you can say I am a sole trader yourself, and we are opening a bookstore, Jareer bookstore, or you can say Tahir bookstore, opposite to Jareer bookstore in competition. Done, Tahir? So what to do? We have to start the business, we have to have some investment in our hands. Tahir, you have $100,000, so he is investing in the Tahir bookstore. Currently they are where? Cash at office. Those $100,000 are in the office. Okay. So what to do? This is a transaction. When I am saying transaction, you know very well the day-to-day activities of the business. I told you in the last class, transaction. So these are the 4 steps we need to fill. Number 1, account titles, the word with which you have to make the entry. So I am telling you the technique how to extract the words out of this transaction. First of all, you need to see what is happening. You can see the owner is starting the business. So this should click in your mind that there will be some capital involved, because the amount of money which the owner is investing in the business is called capital. So there is some capital involved. And the other thing you can see very, very clearly is written over here, which is cash. So you need to search for this word in the transaction. Once you have done so, write it. 1 is cash. Account, what is account? I will tell you later on in ledger accounting class. And the other thing is capital. Fine. So cash account and capital account, these are the 2 account titles with which we will make the entry. Second step, what is the nature of cash? What is cash? Cash is my asset. Remember, current, non-current? Current asset, because it is continuously moving. I told you in the last class. Okay. So cash is my asset. You will write here asset. Okay. What about the capital? Capital, as the name is saying, capital. As the name is saying, capital is capital, of course, one of the pillars of accounting. So write here capital. Now from the business point of view, cash is increasing or decreasing? Increasing. Business is getting the inflow. I will not see my pocket, I told you earlier. So from the business point of view, cash is, so you will write here increase. What is capital? The amount of money invested in the business. It is increasing or decreasing? Increasing. Again, this is also increasing. The amount of money invested in the business has increased. Similarly, what is the second definition of capital? The amount of money which the business owes back to the owner has increased or not? Because I am giving the business 100,000, the business owes me this money back. The business has to give me this money back. Getting it? Finally, you have to apply the rules of accounting. Whenever asset increases, it is, I told you in the last slide as well, you can see your notes. Whenever asset increases, it is debit. So debit, and whenever capital increases, it is always it will be like this. If you are writing, if you are facing with this situation that both are coming debit, it means you have done a mistake. So check your mistake, you can say. Okay? Easy, difficult? This is the first entry of the business, always. I have explanation for you as well. What is the explanation? From the business point of view, cash is coming in to the business. The amount of money invested in the business is also increasing. Done? If you have some other point to add, you can add in this slide. Example number 2, please. Owner started the business with 100,000. Now this is the difference coming in. Now in the business bank account, not in office. Now you are keeping it in the business bank account because this heavy duty amount you cannot keep at the office. So if they are saying like this, so only there is one difference, and that one difference is instead of writing cash account, you will write bank account, and the other side will be same capital. Cash either at office or in the bank account is your asset. Only the place is changed, but the nature is not changed. Asset. Capital is capital. So from the business point of view again, bank is increasing and capital is also increasing. You are investing, asset increase and capital increase. Getting it? Easy. So this is the explanation. From the business point of view, bank account is increasing, the amount of money invested in the business is also increasing. Example number 3, purchase the building for, we need to extract account title. Cash is given to you, one is cash, so you can write one is cash. One is cash. Okay. The second point you should note, you should learn as well, new for you maybe, when you are purchasing a non-current asset, when you are purchasing it is a capital expenditure, remember, you have to use their specific name. Like if I am purchasing a building, you will write building account. If you are purchasing machinery, you will write machinery account. Purchasing motor vehicles, motor vehicle account. Purchasing land, land account. Their specific name you have to use. So in this situation I am purchasing a building. So building account, because it is a non-current asset. Cash is my, building is also my, remember? But the difference is that cash is my current asset and building is my, remember? Okay, you should also know this thing as well. Now from the business point of view, the business is purchasing the building. Cash is going out or coming in? I am purchasing. Okay, so cash is going out. From the business point of view, you will say decrease. I am purchasing the building. So building is coming in. Building is coming in to the business. Okay, I am having the building. Yes, please. Because I am paying for the building. You are purchasing something, so you pay or you get. When you are purchasing a handbag, so you pay or they give you a handbag as well as some cash. Okay, so building account, asset will be increased. Why? Because I am purchasing it. I am purchasing the asset. Asset is coming into the business. I will run the building. I will own the building now. So my building is increasing. Whenever asset increase it is, whenever asset decrease it is. So see again, one debit and one credit. Okay. Easy, difficult? What is the point in this situation? If you are purchasing a non-current asset, you have to use their specific name. This is the summary of this slide. B, building is being purchased, so assets are increasing from the business point of view. The cash is going out, so cash is decreasing. Always remember, point to highlight, always remember, when a non-current asset is being purchased, you have to write their specific name as an account title. I have written it for you, so that you don't forget. Okay. Easy, difficult? Example number 4. Purchase machinery for 10,000 cash again. So now tell me one thing. Okay, do it yourself, then I will do it. Do it, very easy. Complete all the 4 parts. Do it yourself. I will do it. I know you know. So, what is the entry? Yeah. Which is debit, which is credit? Machinery debit, cash credit. Okay. So So how to make this entry again? You are purchasing the machinery. Machinery is my non-current assets. So write that specific name machinery. Machinery account, and then we have cash account as well. Machinery from the business point of view asset, cash is also asset. I am purchasing machinery, it is coming in, increasing. I am paying for it on the cash, decreasing. Asset increase, debit, cash, asset decrease, credit. Getting it? Okay. Now, what is DR and CR? This shortcut for debit and credit. But you can say me, sir, debit, DEBIT. Where is R? So tell me, where is R? Credit we have R, CREDIT, credit, CR. But where is R in debit? So why we have written DR? Huh? Any idea, Hassan? Okay, DR means debit to register, CR means credit to register. So like that we have written DR and CR. It is not like we are extracting CR from credit, no. It is credit to register, debit to register, so R means register. Okay, you can write like this as well in your workings. No need to write again and again full debit, credit. Nickname. Next. Machinery is being purchased. Assets are increasing from the business point of view, cash is going out, so cash is. Example number 5, stay with me please, don't go ahead, I know you know. Okay, so even if you know, stay with the class. Example number 5, purchased office furniture for cash. Office furniture is my non-current asset again, because I will purchase the furniture to use, not to sell. Like we have purchased these tables to use for the classes, not to sell. They are here for more than 2 years now. Okay. So what to write? First of all, their specific name. What is the specific name?
Furniture account.
Office furniture account and cash account. Fine. It is my asset, non-current asset. It is also my asset. Coming in, going out. Furniture. I am purchasing the furniture. So coming in or not? Definitely increasing. And I am paying for it. So this is debit and this is credit. Fine. Okay. Okay. Example number 6. Purchase goods on cash for 1,000 from Mr. Apple. Mr. Apple. Purchase goods on cash for 1,000 from Mr. Apple. Now see, whenever it is written goods, goods means your raw material, you can say your inventory, the product with which you are dealing. It can be any product, but in every business they are called goods. Like if you are talking about the table manufacturer, the tables will be goods for them. Similarly, Lulu hypermarket, all the products are goods for them. Al Fardan, cards are goods for them. Okay. So the product with which you are trading is called goods. So examiner, if he is writing like this goods, it means he is referring to the current assets, the inventory, raw material. Okay. Now these are not non-current assets. So what is the rule? You will write a word, it is called purchases. It is called purchases. Every time, whichever business it is, for goods you will write the same word, which is purchases. And I am purchasing on cash, so the other thing is cash. Fine. What is the nature of purchases?
Expense.
Yeah, this is something to be learned here. When I am purchasing the goods, at that time they are expense. At that time they are, why? Because I am purchasing the goods, it is revenue expenditure or not, I told you. If you are purchasing the goods, inventory for trading purpose, it is your revenue expenditure. So it is an expense. At what time it is your asset? Is the time of year end, you can say. Like if I am making the accounts from 1st Jan to 31st December. So I am purchasing the goods here, 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 here. So all these 4 transactions are expenses during the year. But if something is remaining at this year end, when I will do the stock counting, I will go to the warehouse on 31st of December, I will do stock counting, inventory counting. At that time I will conclude how many tables are remaining, how many cards are remaining. So I have to write in the balance sheet basically that this is my inventory now, closing inventory. We will study later on this chapter as well, inventory. So at this time you will call it is my asset, inventory. During the year when you are purchasing it, it is continuously moving, coming in, going out, coming in, going out. At that time it is expense, revenue, expense, revenue, expense, revenue. Because the opposite of revenue is expense, not asset. Getting my point? So that's why during the year when you will purchase, you will refer it to as an not asset. Getting the logic? At the year end it is called asset. What about the cash? Cash is my asset. I am purchasing something. I am purchasing something. Close the door please. I am purchasing something this time. So when you are purchasing something, your expense is increasing or decreasing? I think so, increasing. You are purchasing the inventory, increase, expense increase. And you are purchasing for cash, decrease. Remember I told you assets and expenses, they go in the same way. So every time if asset is increasing, expense will decrease, or expense is increasing, so asset will decrease, because one should be debit and one should be credit. If they both will increase or decrease, then it will be debit, debit, credit, credit, which is wrong. So asset increases, expense increases, debit, and asset decreases. So one debit, one credit. Done. This is from the summary here from this slide is that purchases are expenses. Why they are expenses? Due to this point which I told you. Okay. Don't forget please, because from this class onwards you should know these basics. I will not tell you again and again. Okay. Explanation you can read at home as well. Example number 7, sold goods for 1500 on cash to Mr. Pineapple now. Okay. So sold goods for 1500 on cash. I purchased on cash, now I am selling on cash. So always remember, when you are selling the goods, you have to use a name, it is called sales. Because when I purchased goods, I called it purchases. Now I am selling the goods, I will call it sales. So one is sales and I am selling on, so cash. Nature, sales is my income or revenue, you can say income, and cash is my, fine. So sales are increasing or decreasing? My happiness is increasing or decreasing? I am selling something, increasing, increased. And the customer is paying me in cash, so cash is coming in, going out, coming in, increasing as well. Okay. So income increases, asset increases. See, one debit, one credit. Fine. Easy, difficult? Easy. Now the other point, remember in example number 6, it was purchase goods on cash. Now I am saying purchase goods on credit. When I am telling you credit means I am not paying now. When I am purchasing something on credit, it means I am not paying now, I will pay in 15 days, 30 days, maybe 45 days, depending on the credit period. Okay. So this time I am purchasing from whom? That was Mr. Apple, then Pineapple, then Banana. Okay. So what is the account title we have to use when you are purchasing some goods? I told you. Purchases account. Okay, always. And I am purchasing on credit this time. So if I am purchasing on cash, I will write cash. So this time I am purchasing on credit. So this person, Mr. Banana, basically he is my supplier or customer? Supplier, because I am purchasing from him. So he is my supplier. So he is my supplier. And he is my credit supplier. So there are two types of suppliers I told you in the last class. One is cash supplier, one is credit supplier. And credit supplier, we call him something called Yeah. So you will write trade because you are trading with him and you have to pay him in the future. So there are trade payables. So trade payables is the word you will use when you are purchasing on credit. Huh? So I will write here trade payables. It depends, like you can also write the name of the person in bracket. Like you can open a bracket, you can write Mr. Banana. But it is not necessary. It depends on you. Okay. Directly. If you will write directly Mr. Banana, so you will not get this logic. Okay. So don't write Mr. Banana directly. Write trade payables because he is your payable. So Mr. Banana in bracket is optional, but trade payables is compulsory. You have to write this word. Okay. In examination, when he will give you 4 options, he will give you like this: purchases debit, trade payables credit. He can give you another option: trade payables debit, purchases credit, like this. He can write in bracket as well, Mr. Banana. Okay, but he will write this word payables to let you know that, or he can write trade receivables in the C option and D option, receivables, receivables. So you have to select one of them. But what is the nature of purchases? I just told you they are expenses during the year and asset at the end of the year. Payables I have to pay in the future. They are my. So I am purchasing my expenses. I have to pay in the future. Getting my point? I have to pay in the future or not? So liability is also increasing. So as expense increase, debit, liability increase. Fine, easy, very easy. Difficult. You have to practice it again and again to make you familiar. I will give you many handouts, inshallah. It will be fine. I completed this much size of register only making entries and entries when I learned this thing. So I don't have that registered, but I can show you this much size. Only entries and ledger accounts, trial balance, entries, ledger account, trial balance. So much. You have to practice it a lot. I will give you questions as much as possible on the group as well, inshallah. So it depends on you how much you practice, so that later on when I will ask you, okay, purchase on credit, what is the entry? You should tell me like this. So this is the entry. Getting it? So basically these 2 steps are imaginary steps. You should run these 2 steps in your mind. What you have to write is the account title and the debit or credit. So if I am asking you what is the entry, you have to tell me purchases debit, trade payables, Mr. Banana credit. So you have to tell this in the exam. So these 2 steps are imaginary steps for your knowledge, so that you can write this final step. Okay? Sold goods on credit. Remember in the earlier example I told you sold goods on cash. Now I am telling you sold goods on credit to Mr. Now this is orange. Okay. So now see, sold goods, I told you, you will write the specific name which is called sales account, and this time you are selling on credit. So Mr. Orange is your customer, and I think so credit customer. So what is the word we use for credit customers? I told you in the last class. We call them, because we are trading with them and we need to receive from them in the future. You may feel it difficult, Miss Padna, because you were maybe absent in the first class. So that's why maybe as well. So never ever miss a class. Why you miss that class? Done, given papers? Sorry? Still you should have attended the class. Okay? This is the rule, always remember. Like I told you in the last class, my rule, depending on my experience, if you are missing a class, although we are recording it now, but this classroom environment class can make you pass or fail. Write this point now. I have never studied so much at home. I used to take all the classes sitting on the main desk, focusing, revising a little bit, etc. I passed all the papers, alhamdulillah, in the first attempt with good marks. Getting it? So follow the teacher if you are taking full-time tuition. and I will try inshallah my best to cover everything in the class, all the questions maybe, so that you don't need to do so much at home. Don't miss the class. Come on time, I will leave you on time. Okay. Now the second thing we have to write is trade receivables account. You can also write the name Mr. Orange. What is the nature of sales? Trade receivables are my assets. Remember, my assets, current assets you can say, because I have to receive them within a year. I am happy or sad, I am selling something. So income is increasing, and I have to receive in the future or not. So he is also increasing. So both are increasing. Income increase is credit, and asset increase is debit. Okay, of course in this working we have written the credit thing first, but when you are pronouncing it or when you are writing it in the exam, first you have to write the debit side and then you will write the credit side. So how to pronounce this? You will write trade receivables, debit, sales, credit. This is how to pronounce this entry. Okay. Example number 10, paid the amount owing to Mr. Banana. Remember Mr. Banana? Earlier I purchased something from him on credit. Now I am paying him. Now I am paying him, and I am paying him by check, not by cash. I am paying him by check. So always remember, if this word is written, so you have to use bank account. If cash is written, you will write cash account. If check is written, you will write bank account, because check is related to the bank or not. Mr. Banana was my payable or receivable? Mr. Banana was my payable. That's why I am paying him. Okay. So you can write on the other side trade payables. Trade payables, and you can write the name as well, Mr. Banana. Nature, now I hope so you are easy with this nature step. Bank is my asset and trade payables are my liability. I have to pay them. Now I am paying them, but nature is still same. I am paying them. So my bank account will decrease or increase? Not my bank account, the business bank account. Decrease. I am paying them. I have paid them. The liability will decrease or increase? Decrease. Now at that time the liability increased, but now the liability will decrease. So liability will also decrease. Asset decrease, liability decrease. So what is the entry? Trade payables, debit, bank account, credit. Easy, difficult? Say it, easy. Very easy. If you will consider it difficult, it will be difficult for the whole of your life. See, so easy. I have made this slide by putting so much effort and time. We used to do this on the board, remember that? All these entries we used to do on the board, and you have to write everything which I am writing on the board. Still we have made it so easy for you, notes and slides and graphics and videos, everything. So you should say very easy now.
Very easy.
Huh? Sorry?
Very easy.
Yeah, very easy. Just a little bit of a concept and you can do it like this. What do you think? So easy, man. At least easy than the chemistry equations, or not? Yes. Physics numericals. Okay? Okay, example number 11, Mr. Orange. Remember Mr. Orange was my customer. Paid the amount which he owed. Which he owed means which he had to pay me by check again. So check means, so first thing we can write bank account. Mr. Orange was my, that's why he is paying me. So you can write Mr. Orange trade receivables. Bank is my, receivable is also my asset. Now he is paying me. So cash is coming in, my bank account will increase. He is giving me the money. This time he will, because at that time I increased him. Now he has paid me, he is no longer a receivable. So I will say receivables are decreasing now. He is no longer a receivable. Now Abdur Rahman is my friend. I don't know where he is, Abdur Rahman. Tell them I will not allow them. Okay? Just kidding, man. They know. everything I think so which I am teaching now, no problems.
No, sir, you should.
I will tell after the class inshallah. Recording man, recording. Okay, asset increased. What is asset increased? Debit. So bank account is debit and asset decrease? Credit. Example number 12, purchase goods on credit from Mr. Now Potato. New supplier is coming in the show, his name is Potato. So purchased goods on credit from Mr. Potato costing 900. On, this is for you basically, solve it because you need to revise as well. So this is a question for you people. Done? Done?
Yes, sir.
Okay. So what are the account titles? I am purchasing some goods, so I will write purchases. And I am purchasing on credit, so Mr. Potato is my supplier. So supplier means credit supplier, okay. So credit supplier is called trade payables. So I will write here trade payables and his name is Mr. Potato, okay. MP means Minister of Parliament. We have made it Mr. Potato. Okay, nature, purchases are my expenses, remember, payable is my expense increased because I am purchasing and liability also increased because I am purchasing on credit. Expense increase, liability increase, fine, good. Okay, paid the amount owing to Mr. Potato now. This is new for you. I am paying the amount owing to Mr. Potato by cash. So $10 discount for early payment was received. They are giving me $10 discount for early payment was received. So first of all tell me I am paying by cash or not. So one thing I can write cash, okay, I can write cash. Who is Mr. Potato? Trade payable. So trade payable, Mr. Potato. Fine, two things are there. Can you tell me for how much I purchased the goods? In the last slide, how much I purchased the goods? 900. Really? So how much discount is giving me? Not 10%, $10. So 900 minus 10, how much? 890. So I can say that I have paid how much? 890. Fine. Okay. But the amount was how much, which I wrote in the trade payables, if you remember. 900. So the trade payables will go down by how much? 900. But I have paid how much? 890. So this difference of 10 basically is called, I am receiving or I am allowing? Receiving. So this is discount received. The supplier is giving me the discount, so I will say $10 discount received. I am happy or sad? Very happy. So this is my, getting it? This is the income for $10. So see, 10 plus 890 is how much? 900. Like this we have to make the entry. Now I am making another column here. This time we have more than 2 debits and credits, okay. So I will write here discount received. Discount received. This is the third account which you have to make. Now what is the nature of discount received? Income. I have just told you here. Okay. Cash is my asset. Trade payables are my. Always remember, debits and credits should be equal in figures. Okay. So liability is increasing or decreasing? Because I am paying to Mr. Potato now, so liability is decreasing. I am paying by cash. Cash is decreasing or increasing? Because I am paying by cash. My happiness is increasing or decreasing? Increasing. Income is increasing. Done. Whenever income increase, it is asset decrease. Oh? Liability decrease. So see, debit is for 900. Credit, this one is for 890 because I am paying 890, and income is for 10. So 10 plus 890 how much? Done. 10 plus 890 how much? 900. So the entry is like this: trade payables debit, cash credit, discount received credit. Both are credit. So although two credits are there, but amount should be in total same. Getting it? So this is the idea behind this transaction. Getting it? Good. So you can write like this. See, debit, trade payables, account by 900. Then you will write credit, cash account by 890, and then you will write credit, discount received by how much? 10. This is the double entry. This is how to write the double entry basic. In exam they will write like this. Okay? Easy, difficult? See, 890 plus 10 how much? So debit is equal to credit or not? It should be equal. Written? Kindly write this please. Everyone write this. Even if I am doing this, you should do this. If I am doing this, you should do this as well. Because it will remind you, really, I am not kidding. It will remind you of the concepts. There is a reason behind everything. Okay? So kindly make this smiley as well. You will be reminded about this thing. Everyone knows that the class is till 9:45? Now you know. No, actually we started 15 minutes late. Why? Make a tea for her. Green tea. Coffee. I will leave you inshallah. 10 minutes are remaining. Do it quickly please. Written? Okay, move ahead then. Example number 14 please. Sold goods on credit to Mr. Tomato now. Mr. Tomato is coming into the show. This is for you. You know very well how to solve it. Kindly tell me. So I am selling on credit. So sales, I think so. And the second thing, Mr. Tomato, receivables. Sorry. Mr. Tomato is there. Sales is my happiness, income. I am very happy. And trade receivables is my asset. Currently I am very sad, but later on I will be happy when Abdul Rahman will pay me. Okay. Then happiness is increasing. Abdul Rahman is also increasing in size. Okay. So now income increases, credit, asset increase, debit. This is the normal entry I have already told you before, but there is a reason behind telling it again, because we need to do this. Now Abdur Rahman is paying me, or Mr. Tomato is paying me what he owed by cash. By? Again we have to make another column now, because we have to incorporate the discount. First thing is cash. You can write cash. Cash is coming in or going out? Coming in. The customer is paying you. So asset increase. You can write debit. Now the second thing you can write Mr. Tomato. Mr. Tomato was my trade receivables. Mr. Tomato. Empty means Mr. Tomato. He's paying me, so he's paying me, so he is decreasing. So asset decrease. How much was for sale amount? 1300. So 1300 is the amount of how much he is paying me exactly, because 20 I am giving him as a discount. So 1280 is coming in, but he is going down by 1300 because I have to cancel the full figure in the accounts. How much is remaining? 20, the same 20. This time you will call it discount, because you are allowing the discount allowed. You are happy to allow the discount? This is your, and you are, see, you are crying as okay. So your sadness is increasing, it means your expense is increasing, and your expense increases. So see, 20 plus 1280, how much? So debit is equal to credit or not? Fine. Easy, difficult?
Very easy.
Good. Yeah. Example number 16. One of the credit customers returned goods costing $100, saying that they were not according to the sample. Okay. Now, if you remember, I told you yesterday that discount can be allowed or discount can be received. So the supplier, he sent me some goods which are not according to the sample. So what I will do now? I will return the goods to the supplier. So goods are going out or coming in? From the business point of view, if I am returning the goods are going out. Previously they came in, and now I am not happy, so I will return them to the supplier. So these are called return outwards. When you are returning goods to the supplier, these are called return outwards. Okay. These are also called purchase returns. Okay. These are also called purchase returns. So in this example, they are saying one of the credit customers returned goods. It means now my customer is returning me goods. So now, I sold something to the customer, and the customer is saying to me that they are not according to the sample which I agreed with them earlier. So they are sending me goods back now. Now goods are coming in or not? So these are called return inwards, because now my customer is returning me. Getting my point? So in this situation, if there is something written like returns in the transaction, you need to see that the goods are going out or coming in. So in this situation, the customer is returning the good, it means the goods are coming in again. So what is the name we have to use? Return inwards. Okay, this is the account title which we will use, which is called return inwards. See, this is customer, it means I sold him earlier. It means I sold him earlier. So they are also called sales return, but for your examination purpose they are called return inwards. Okay, so you should know these both names. Okay, the opposite of sales is sales return, and in international terminology sales return is called return inwards. Fine. On the other side, They are telling you credit customer was there. So what is the name we use for credit customers? Trade receivables. So other side is trade receivables account. What is the nature of sales? What is the nature of sales? I told you yesterday. Income. So what should be the nature of sales return? Of course, it should be opposite. When sales is my income, my happiness, so sales return is my sadness because I am not happy. If one of you is taking refund from excellence, that we are not happy in the classes, we want refund, so we will be happy. So this sadness is my, I am not happy because customer is returning me the goods. What about the trade receivables? They are my assets, current assets. So my sadness is increasing or decreasing? Increasing. Expense increased. And on the other side, earlier I booked him. Earlier I increased him that he has to pay me. But now when he is returning me these goods, he will pay me for this $100. No. So now I will reduce him. So expense increase, asset decrease, see one debit, one credit. This is the double entry for sales return, you can say. Return inwards. Fine. Getting the logic? Everyone? Good. Example number 17. Now we return goods to one of our credit suppliers. We are returning the goods. Costing $200, claiming that they were damaged when received. I called the supplier. I told them that they were damaged when they were received. So I will not pay you these $200. So first of all you need to search for this word, which is credit suppliers, okay, plus return goods. Now I am returning. So goods are going out or not? So they are called return outwards, because I am returning to the supplier. They are also called purchases return. Why? Because earlier I purchased and now I am returning. So purchases return account. Done? And what is the name we use for credit supplier? Trade payables, because we need to pay them, they are our liabilities. Trade payables account. So remember purchases. What is the nature of purchases? I told you yesterday. Expense. During the year it is my expense. At the end of the year when I will calculate the inventory, at that time it is my asset. So if purchases is expense, what should be the nature of purchase return? Yeah, you can say I am happy if the supplier is ready to return the goods, because many times suppliers have these policies that no return policy.
So in that case, the contract has been breached and you can sue.
So if the supplier has the policy no return, still if he is happy to return the goods, then I will be happy or not? Definitely. Okay?
So if the goods are damaged, you could still sue them.
Yeah.
No, in this
Tahir will sue it.
in this case, I think there's a guarantee that
Okay, so now see, Habibi, focus. Purchases return, either you can say this is income, either you can say this is income, or you can say this is reduction in my expense. This is reduction in my, because purchases was my expense and now my expense will reduce. Getting my point? So you can write like this as well, that they are my expenses which are now reducing, because earlier they increased. Remember? So I am very happy because my expenses are reducing. On the other side, trade payables are my liability. I have to pay them, but now I am returning the goods, so I will pay them.
No.
I will not pay them the $200. So they are also expense decrease, liability decrease. Okay. If I am going back on the 16th example, when I told you this thing, sales return. Okay. So here you can also write that this is, instead of expense increasing, you can write here income decreased. Income, because sales was my income, so you can say sales return is my income decreased. At that time income increased, now income is decreasing. So income is decreasing, I am not happy. Getting it? Everyone? Good. One of our cash customers, now in the previous two examples we have discussed about the credit people. One is trade receivables, another is trade payable. But now what if a cash customer or a cash supplier is involved? Very easy. One of our cash customers, it means I sold something on cash to a customer, returned goods costing $100, saying that they were not according to the sample. Same situation, but now the customer is a cash customer. So this time I will not use the word trade receivables. So what should I use? Why? Because he gave me cash and now he is returning the goods, so I have to return him cash. So one thing will be cash and he is customer, so you will write sales return, and sales return are called because the goods are coming in. Getting it? Cash is my, sales is my income, so sales return is my, but you can say like I just told you, sales means income increase, so sales return means income decrease. This is a much better explanation. So income is decreasing, I am not happy, my customer is returning me some goods, I have to pay cash or not? Refund, asset decrease, credit, income decrease, debit. Getting it everyone? Good. Done? Yes, please. Nature? Sales is my income. When I told you about sales, sales is my income increased. I am happy that I am selling something. So now when the customer is returning me those goods, so it will be reversed or not? My sales will decrease, my income will decrease. Getting it? You have to see the other way. When I sold something, my income increased. When the customer is returning me those goods, my income will decrease, my sales will decrease. Okay? Similarly, when I purchase something, my expense was increasing, and when I am returning those goods to the supplier, my expense will decrease. Getting it? Done? Example number 19. We returned goods to one of our cash suppliers costing $200, claiming that they were damaged when received. So now it is cash supplier, so now we will not write trade payables but cash.
Excuse me, sir.
Yes, please.
I want to know whether we can adopt to this concept.
Judicial concept?
No, it's a concept that I want to ask if we can adopt to it. Whenever we talk of sales and we talk of income, then purchase expenses, does that work?
Yeah, sales is income and purchases are expenses. So,
For the nature.
yeah, I told you this thing.
Nature, whenever we see sales, we put income. Whenever we see purchase, we put expenditure. Is that okay?
Sales, income, purchases, expenses. I told you the same thing. I told you this thing or not? So what is new? Sales is income, purchases, expenses. Sales return, income decrease. Purchase return, expense decrease. This is the summary. Okay? So now this time I will not write trade payables but cash again, because cash is involved. And who is returning the goods? The business is returning the goods to the supplier, so these are called return outwards or purchases returned. Purchases return account. Cash is my asset. Now see, purchases are always you should do like this. Purchases are my expenses. So what should be purchase return? They are also expenses, but now this time expense is decreasing because I am very happy because the supplier is ready to accept those goods back. Getting it? And now I will get the cash or not? Yes. So asset increase, debit, and expense decrease, credit. Fine? Easy? Okay, now remember I told you some other transactions, electricity, wages, salaries, remember those 3 points. So if you are paying some electricity bill, so always remember when there is such type of a situation, electricity bill, wages, salaries, or water bill, depreciation, okay, so all these things are my expenses. But what should be the account title? If you remember, I told you in the non-current assets that if you are purchasing a non-current asset or selling a non-current asset, you have to use their specific name. Similarly, when an expense or an income is involved, you will use their specific name. That what is this? Electricity bill, fine. You will use electricity expense account. Insurance premium you are paying, insurance expense account. You are paying the water bill, water expense account. Depreciation charging, depreciation expense account. Getting my point? Interest you are paying to the bank, interest expense account. Paying salaries to the employees, salaries expense account. You have to attach this word with the main word, expense account. Similarly, when you are receiving some income, commission you are receiving, commission income account. You are receiving rent, rent income account. Okay? So this time you are paying the electricity bill, so it will be electricity expense account. Electricity expense account. And if they are not mentioning it, that how you are paying, so you will assume that you are paying through. So electricity expense, nature of course expense is increasing, and cash is my asset, I am paying, so it is decreasing. Expense increased, asset decrease. Done? Easy? Good. Done? See, what is this? The payment of expenses involves the use of their specific name in the account title. I told you this thing, okay? Paid insurance premium amounting to 600. Do this and tell me. Very easy, same. Just you need to change the name of electricity and you need to write their insurance. Yeah. Done? You made like this? Excellent. Now, received interest from the bank credited to the business bank account, because when the bank will give you the interest, they will not come to your home to give you the interest. They will directly enter it into your bank account. Okay? When you will receive the bank statement, from there you will know that yeah, the interest is now credited to my account. Okay? Now received interest, it means this is my income. So whenever you are receiving any income, I just told you, you have to use the specific name. Okay, again. So what to write? Interest income account. Interest income account. And on the other side, they are involving the bank. So now this time I will write the bank account, not the cash account. Okay. So interest income is my income, bank is my current asset. Both are my current asset, either cash at office or cash at bank. Okay, both are my current asset. So income is increasing, definitely I am very happy. Income is increasing, I am planning to go in the hellfire because I am receiving some interest from the bank. And asset is also increasing, definitely cash is increasing in the bank account, so asset is also increasing. So income increase and asset increase, remember, so see, one debit, one credit. So how to pronounce it? Bank account debit, interest income account credit, fine. Yes please. See again, the receipt of income involves the use of their specific name in the account title, which I just told you. Remember, I purchased some machinery, now I am selling some machinery, the same machinery. So when you purchase the machinery, you wrote machinery account. When you will sell the machinery, again you will write machinery account, but this time it will decrease. Okay. So one, you can write the specific name because machinery is my non-current asset. So I told you, if it is a non-current asset, you have to write the specific name, which is machinery account. I am selling for, so cash account. So machinery is my asset, non-current asset, you can say, and cash is also my asset but current asset. I am selling the machinery, so machinery is going out or coming in? Going out. So machinery is going out means decrease, and someone is paying me something for that machinery, increase. Debit and credit, fine, easy. So see, similar to their purchase, the sale of any of the non-current assets involves the use of their specific name in the account title. Very important example now. Owner withdrew some cash from the office for his personal use. So yesterday I told you this is called drawings, when the owner is withdrawing something from the business. So now see, he invested something in the business earlier. So he told the business, I am giving you my money, play with this and return me some profit and principal amount as well. Now the business will say, see, you are taking the money back. Now I am not accountable for this money which you are taking back. Getting my point? So capital will? Done? So account title, one is drawings. Always remember, when the owner is withdrawing something, so he will use this word which is, and you are withdrawing some cash, so cash account. From the office, if it is from the bank, so you will write bank account. She is saying why it is not capital account. Very good question and very good answer coming ahead. What is the nature of drawings? Capital. Now it will come. So no. I invested in the business, it was capital or not? So at that time, account title as well as nature both were capital. They name like this, capital. But this time when you are withdrawing some money, in account title you will not write capital, but nature is capital. How? I told you the business, but the business is saying to me, now I am not accountable to you for this amount of money which you are withdrawing from the business. So I invested in the business, it was capital. I am withdrawing from the business, it is expense. No, it is capital. But this time the capital is, at that time the capital increased when I invested in the business. But this time I am withdrawing from the business, so the capital will, getting my point. So the nature of drawings is not expense. The nature of drawings is reduction in capital figure. Getting it? The accountability of the business is reducing to the extent of drawings. Done? What about the cash? It is my and asset is also from the business point of view. Now see again, my pocket is increasing because I am withdrawing from the business. But again, we are not making these entries from our point of view, we are making these entries from the business point of view, because who is accountable? Business is accountable to the Owner, very important point, my friends. Okay. So capital decrease is debit or credit? Capital increase is credit, capital decrease is debit. And this is, if you are not sure, you can see the other side, because you know very well asset decrease is credit, so that other side should be debit now. But how to pronounce this? Drawings account debit, cash account credit. Fine. When the owner is invested in a business, the capital increased. If the owner is withdrawing something from the business, it is referred to as drawings. It is a reduction in capital. The other entry is cash, as he is withdrawing cash from the office. The full explanation is with you. Okay. What about this one? Now everything is same except cash account, because I am withdrawing from the business bank account. Make this and tell me the answer, please. Very easy. Yes, definitely. You are getting the insight why FIA is so important. Okay. Asset is, both are decreasing. So asset decrease is credit and capital decrease is debit. Now see, the other entry is bank. Why? As he is withdrawing cash from the business bank account. Okay, from the bank. Owner withdrew some goods. Now in the above two examples, the owner, he was withdrawing some cash, either from office or from the bank account. Getting it? But this time he is not in the need of some cash. He wants some goods. Like I gave you this example of Jarir bookstore. Again I am telling you, for example, the owner has a bookstore. He wants some stationery for his children. So instead of going to other shops, he can take the stationery from his own shop or not? Or you are running a cafeteria. Okay. So you can take some burgers or not for your home. So withdrawing some goods now for the personal use. So what will be the entry? Very easy. When I purchased some goods, I used a word. It was, when I purchased some goods, what word I used? Purchases. Remember, purchases account. Purchase of goods is purchases account. So now I am withdrawing some goods. So again I will use the same word, but this time expense will decrease. Okay. So one thing is same, which is drawings, because you are withdrawing something. Drawings are capital reduction, debit. One is fine. The other side is when you are withdrawing. See, this word is very important. Goods means purchases. When you purchase them, you wrote purchases or not? What is the nature of purchases? It was the nature of purchase. It is still the nature of purchase. So expense, at that time my expense increased, but now my expense will decrease, because it is no longer an expense of the business. It is no longer an expense of the business, because I have taken the goods out of the business. So it is no longer an expense of the business. Expense decreased, credit. Easy? So if you are withdrawing some cash, the entry will always be like this: drawings debit, cash credit or bank credit. If you are withdrawing some goods, the entry will always be like this: drawings debit, purchases credit. But drawings is always debit. Drawings is always, because it is a reduction in capital.